The first week of June was not a classic Nasdaq rocket. In this 50-stock Nasdaq basket, 31 names fell, the median stock slipped 2%, and only 19 names rose. The winners were quieter: uniforms, payroll, hotels, auto parts, rail, healthcare, industrial gases, software, and one chip equipment name. Hello everyone, and welcome back to the channel. We are continuing our global market series with the top 10 Nasdaq stocks for the week from May 31st to June 7th, 2026. For clarity, figures in this video are rounded, and currency amounts are in US dollars unless specified otherwise. Let us count down the names that held up while big technology cracked. At number 10, ASML gained 2%. This was the only chip equipment name in the top 10, and it stood out because the broader semiconductor trade was under pressure. ASML's April update gave investors the long-term context. First quarter net sales were €9 billion, and management said customers were accelerating capacity expansion plans for 2026 and beyond. At number 9, Roper Technologies rose 2%. The move was modest, but it fit the week's preference for durable, cash-generating businesses. In April, Roper reported 11% revenue growth, 6% organic growth, and 11% free cash flow growth. Management also raised its full-year profit per share outlook and expanded its buyback capacity. At number 8, Linde advanced 2%. The Industrial Gases Group had fresh June news, but not the kind of dramatic earnings surprise that usually powers a countdown. On June 1st, Linde published its sustainability report, saying it cut absolute greenhouse gas emissions by 10% versus its 2021 baseline, and helped customers avoid 98 million metric tons of emissions. At number 7, Regeneron Pharmaceuticals climbed 3%. This was one of the clearer company-specific stories in the group. On June the 4th, Regeneron said new clinical data and research from metabolic disease, ophthalmology and rare disease programs would be presented at major medical meetings in June, including the American Diabetes Association meeting and Endo 2026. At number 6, Amgen gained 4%. The company had a shareholder return event inside the window. Its second quarter dividend, 252 cents per share, was paid on June 5th to holders of record from mid-May. That made Amgen another steady healthcare name on a Nasdaq leaderboard, dominated by defensive resilience rather than explosive growth. At number 5, CSX rose 4%. The rail operator's latest company update was also about capital returns. CSX said its board approved a 14-cent quarterly dividend, payable on June 15th to shareholders of record at the close of business on May 29th. In a week when high-growth technology sold off, that steady rail profile mattered. At number 4, O'Reilly Automotive rose 4%. The strongest fresh company signal came on June 1st, when O'Reilly's board approved an additional $2 billion for its share-repurchase program. The filing also noted there was no guarantee how many shares would actually be bought, but the authorization still reinforced management's capital return posture. At number 3, Marriott International gained 5%. Its nearest company update was an increased quarterly cash dividend of 73 cents per share, payable June 30th, after a May 8th announcement that linked the increase to earnings growth and strong cash generation. The stock's week was less about shock news and more about investors rewarding a steady travel compounder. At number 2, Automatic Data Processing also gained 5%. ADP's April dividend announcement set a 170-cent quarterly payout for July 1st, with the record date falling on June 12th. The company also reminded investors that more than 1 million clients across more than 140 countries rely on its payroll and human resources platform. And at number 1, Cintas led the Nasdaq list with a 5% gain. This was not a huge move, but it was the strongest in a weak basket. Cintas had approved a 45-cent quarterly dividend payable June 15th, and the company said it had raised its dividend every year since its initial public offering 42 years earlier. And on the other side of the leaderboard, Broadcom fell 14%. The company reported record second quarter revenue and said AI semiconductor revenue grew 143%. But investors wanted even more. Reuters reported that chipmakers lost over $1 trillion in market value on June 5, as Broadcom's weaker-than-hoped-for report reverberated across Wall Street. So this Nasdaq week was a rotation story. The flashy AI names stumbled, while healthcare, rail, and industrial gases led the top 10. If you found this useful, like the video, subscribe to our channel and comment, was this a healthy rotation into quality compounders, or an early warning that the AI trade is too crowded? Thanks for watching, and see you in the next video.